Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Only 1/3 of Americans can correctly identify the primary measure of inflation, yet a survey from DA Davidson reveals that the majority of respondents report feeling significantly or moderately impacted by inflation. Andrew Crowell, Vice Chairman of Wealth Management at DA Davidson, joins me to discuss the impact of inflation on discretionary spending, as well as savings advice and best practices consumers can put to work this summer. Andrew, it's great to see you as always. Welcome back to Trade Talks.
Thank you, Jill. Nice to be here.
Let's review the findings. Firstly, what was the methodology behind the survey?
Well, the methodology really stemmed from the fact that we haven't seen inflation over 5% since 1990. And we realize there's an entire generation of investors who need to respond to these inflationary pressures, and we wanted to learn about how they were planning to do so. So at late April, we conducted a survey of just over 2,000 representative U.S. households to ask them about inflation and the impact it's having on their spending.
Which generation felt the greatest impact from inflation?
Younger generations. Millennials reported the biggest impact, 78%, compared to only 57% of baby boomers. And we think the reasons are probably many, but first of all, millennials are likely in their early parts of their career with their peak earning potential years away. Also, they may not have built up a reserve cushion or savings plan. They may also be paying off student debt. And so the inflationary pressures are really hitting them in the pocketbook.
Where have respondents dialed back their spending?
Interestingly, dining out was the largest response to that, and vacation and travel was the second largest category.
And the disconnect behind being able to identify what an inflationary reading is and fear of inflation indicated that we have a financial literacy concern that needs to be addressed. What should financial professionals be doing with their clients to bridge this gap?
That's a great question, and it's just so shocking to me that we are not requiring financial literacy as part of a core high school curriculum. In fact, we're graduating students, many of which have never had exposure to this basic life skill. And so it's not a surprise that things about budgeting and investments and savings aren't necessarily top of mind for that generation. I think financial advisors are in a unique position because what we do every day for our clients and for our clients' children is not just help them with their saving and investment plans, but also educate them. And we ask tough questions. We need to ask them, what are you doing to, have you taken on any additional debt in the last 6 months or 12 months? Do rising prices, are they impacting your savings and retirement savings plans? Things like that. So if we ask the tough questions and really get at the pulse of how they're experiencing inflation, I think we have the ability to change the trajectory for them and get them back on a more solid financial footing.
And Andrew, is there anything else of note from the survey we should be aware of? And is there anything in the near term that folks can do over the summer to help alleviate some of the pain they're feeling from inflationary pressures?
Start by setting a budget. Dollars are tight for everybody, but with gas prices being so high and food prices being so high, setting a budget isn't restrictive. In fact, it helps you focus your spending on those priorities that are most important to you. So I'd say start with a budget. Secondly, be a smart consumer. The internet makes it so easy to price compare and look for deals. You can use your rewards points or travel points that you've earned to pay for hotels and airfare. So being a smart consumer that way just helps you stretch your dollars. And lastly, you can buy generic. You don't need to buy name brands all the time. The generic brands as a replacement can help you save a few dollars every time you shop. And I guess the last thing I would say is that the little things really do add up. Think about that $4 or $5 cup of coffee you're buying 5 days a week. Maybe you can brew at home and make it for $1, and that $4 a day savings, $20 a week, $80 a month, it really will add up over the long term.
Yeah, and we saw that happen in real time. And we've had a first shutdown with COVID and we were restricted from going to work. Look how much money was saved from commuting you can't really avoid, but just from not buying breakfast and lunch every day, going into the city, or even if you work locally. I mean, we saw that happen in real time, not just long ago. But to your point about being online and being able to comparison shop, which is a great thing about the internet. The other, one potential downside to that is it's so easy to point and click. I I am, I get myself into trouble with doing that. So you just have to exercise some self-control as well, because it's so easy to shop online.
Exactly. And it's a simple task, but if you're going shopping, make a list. The list is the priority items that you want to purchase, and it helps you from getting distracted as you walk down the aisles on all the other things you really don't need, but that just catch your eye because of the packaging or what have you, the impulse purchases.
Yeah, that's a great point, Andrew. Great to catch up with you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq.